Hello and welcome to the Cryptocurrency News channel. This is going to be the technical, fundamental, and chart analysis for November 30th, 2021. I think we can actually say for certain that Plan B is wrong now. It is roughly 10:58 p.m. Central Standard Time, which is my time, and we are at like 57,000, so I think it's safe to say that we will not blitz to 98,000 in an hour, so therefore Plan B is wrong. But let's go over the technical analysis for today. The oscillators are neutral on the daily. 45 and 47 on the RSI and the stochastic are neutral, no buys, no sells. The commodity channel index, although leaning towards oversold, is still neutral. The average directional index is very, very weak, which means there is no trend forming. The awesome oscillator is negative 4,000, but it's been around negative 4,000 for a while, so there's no change. And because there's no change in the awesome insulator, there's no momentum really building either way. The exponential moving average for 10 days is actually greater than the simple moving average. To me, that actually means the short-term daily momentum is actually positive. But if you look at the 20 and the 30 days, they're basically the exponential is less than the simple, both for the 20 and 30 days. So that to me actually means that in the longer swing of things, if you actually follow this indicator, that this actually might be a bull trap or a dead cat bounce. That's kind of what it indicates when the short-term exponential moving average for 10 is greater than the simple moving average for 10, but the 20 and the 30 are both less. However, generally, the simple moving average and the exponential moving average for 20 is very, very close, only off by 500 points. And by 30, it's off by a little bit more. We've been in kind of a downtrend this month, so I do think it's starting to turn, though, after the futures expired. But right now, it's still pointing kind of like towards kind of a bull trap on the daily. But on the weekly, I think we can see a different story beginning to form, and we swing heavily towards the buys. The RSI and the stochastic are both neutral at 57 and 61. The commodity channel index is 46, leaning more towards overbought, but nowhere near 100 yet. And the average directional index is pretty weak. Awesome oscillator is actually 13,000, but it's been positive on the weekly for a while. So there's really no indications there. So oscillators for me are actually not really buy. They're more or less neutral for me right now. When you look at the moving averages, the exponential moving average is lower than the simple moving average for 10 weeks, which means short-term bearish momentum weekly. But if you look at 20 and 30 weeks, they're fairly positive. So what that actually means on the weekly is that it could be kind of a bear trap for the last 10 weeks, but 20 and 30, when we go back further this year, it's still overall strong momentum coming in. And in terms of like strong buy, I don't know if I would really rate it a strong buy. I would more rate it a buy, but overall, I would say it's a buy as well on the monthly right now. On the weekly graph. If you're looking at the monthly graph, the oscillators, the stochastic is getting towards definitely getting towards the overbought area. The commodity channel index, 92, is also getting towards overbought, but the average directional index is 48, which is not that strong, but it's forming kind of a trend towards the upper area. The awesome oscillator is about the same, so it really hasn't changed all that much. The momentum, I would say, is positive, but once again, 48 isn't really as strong enough to indicate a strong positive trend, so we could be teetering over that overbought area for this month anyways. So realistically, I would actually look at maybe being pretty cautious right now. In terms of the moving averages, the simple moving, the exponential moving for 10 is less than the simple moving for 10. So that means like, because this month is weighted so heavily, we have like somewhat of a bearish momentum going on 10 weeks, but on 20 and 30 weeks, it's definitely bullish. So on the monthly, you could say that it's like a short-term bear for this month, but in December, I do think it will actually swing back based on the 20 and the 30. I don't really look at the 50 because 50 months is like 4 years, and that's really not something worth looking at. Like, really, 20 is on the monthly. 20 is the longest you'll actually want to go back. 10, because it's really, really weighted heavily towards this month, it gives you like current momentum. Like, it basically shows like if this month is moving up or down. But if you actually look at 20, it gives you like a more balanced view of the last 20 months. And I actually do believe that overall, like December is probably going to be bullish. Once we get into January, I'm not really sure. If you look at the BTC USD shorts, it's actually going down a little bit at 2,600 today. The longs have really not moved all that much. Slightly up at 3,400. We're still at like 13 to 1 or something, which is okay. We've been there for like a long time, so there's still more longs than shorts. However, if we look at the fundamental analysis, Janet Yellen actually says that the FATF guidance and FinCEN regulation says it does not cover hardware wallet manufacturers, providers of unhosted wallets, software developers, or miners who don't take custody of funds. So she actually is agreeing that basically like these people don't actually need to report to the IRS for reporting purposes, and it should actually exclude them. So Janet Yellen is actually on the side that says like, these people don't actually need to report, like KYC AML. So obviously that doesn't include DEXs and all that stuff, but it does include hardware wallet manufacturers. So she's actually kind of like agreeing with the amendment, the crypto amendment that we like, that says hardware and software wallet manufacturers, provider of hosted wallets, and software developers and miners, and it would be like validators as well, that don't actually fall under this. So that's actually very, very bullish. Plus, Janet Yellen and Jerome Powell, they kind of said like inflation might not be so transitory. That means it's going to be there for a couple of years, which means if there's inflation, generally that's long-term bullish for Bitcoin. But however, in the short term, it actually might be kind of bearish because it actually might make the market go down, and Bitcoin's momentum might actually swing with the market momentum. I'm still bullish for December, but January and February, I'm not sure. But if you're looking out towards the rest of next year, I would say like we're maybe like after like Q1, we're going to have a couple of bearish months, maybe for 5 or 6 months, and then we'll probably swing bullish again. But this piece of news that Janet Yellen says like, wallet manufacturers, providers, unhosted wallets, and software developers don't have to take people who don't have to take custody of funds don't have to report to the IRS. That is very, very bullish indeed. And also, like, I think realistically, people getting kind of like uncertain about like the consumer price, the consumer confidence index. It's actually kind of low. I watched on CNBC today. The consumer confidence index is kind of low. That actually shows that people might be like shrinking back in and holding onto their money, which is not good for an investable asset like Bitcoin. But inflation will actually push up the price of Bitcoins as well. Also, for those of you wondering, like in the last month or so, the housing market and the car market have tightened a bit because people are buying less houses and less cars in the last month or two, because they're just getting way overpriced, and people are being a little bit more conservative because of the inflation, and everyday goods are actually going up. So in the short term, that should actually hurt crypto, but in the long term, that should help crypto because it should be somewhat of a store of value and a way to actually earn yield and interest rewards far above what the banks should actually give you. So overall, like next month, bullish. After that, not really sure. I would say like maybe very carefully bullish for January, February, March. And then like April onwards, I'd be a little bearish for like 3 or 4 months at least. And then pick up maybe towards the end of next year when the market maybe hits a bottom. So that's kind of my analysis for right now. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.